Okay, let's talk taxes. I know, for most of us, the tax code feels like this giant, impossible chore, a punishment, even. But what if I told you to think of it like a game? Yeah, a really complex game, but one with a rule book you can actually learn. And if you learn the rules, you can use strategies to, well, to win. And that's exactly what we're going to do today. We're handing you the strategy guide.
So, why do you even need a guide? Well, because this is what you're up against. 75,000. That's how many pages are in the US tax code. It is absolutely staggering. And you know what? It feels like it's designed to be intimidating. But here's the secret. Buried in all that complexity, it's not just rules, it's rewards.
So here's the biggest mindset shift you need to make. The tax code isn't just about the government collecting your money. Think of it more like a playbook filled with incentives that the government wants you to use. They're trying to reward certain things, right? Like saving for retirement or going back to school. And the people who know these plays, they pay less. Simple as that. And by the end of this, you're going to be one of them. Okay, before we get into the nitty-gritty, I have to say this. It's super important. I'm not a tax professional, and this is all for educational purposes. Your financial situation is unique, and tax laws are always changing. So please, talk to a licensed CPA to get advice that's actually tailored for you. All right, let's get to it. All right, let's pull back the curtain on the tax code's big secret. And no, it's not some sneaky hidden loophole you have to be a genius to find. The secret is just understanding the system itself. The whole thing is built on a foundation of incentives. So, the US has what's called a progressive tax system. It's also pay as you go, which just means your employer takes out an estimate of your taxes from every paycheck. That's why tax day in April isn't really about paying your taxes for the first time. It's more like settling the tab. You're just figuring out if you paid too much or not enough. But that first word, progressive, that's the key. And it's also probably the most misunderstood concept in all of personal finance. Okay, let's tackle the single biggest myth about taxes. We're going to bust this one wide open right now. I'm sure you've heard it. Someone says something like, "Oh, I don't want that raise. It'll push me into a higher tax bracket." I'm here to tell you that is completely 100% not how it works, not even close. So if we're playing a game, this is our map. These are the 2024 federal tax brackets for a single person. Now here's where everyone gets tripped up. Someone making, let's say, $60,000 a year sees they're in the 22% bracket, and they freak out, thinking their entire 60 grand is getting taxed at 22%. Let me show you why that's so wrong. I want you to picture your income filling up a series of buckets. So for that person making 60 grand, the first bucket is the same size for everyone. Your first $11,600 only gets taxed at the lowest rate, 10%, period. That's $1,160. Okay, so once that first little bucket is full, your money starts spilling into the next one. The next chunk of your income, everything from about 11 grand up to 47 grand, that gets taxed at 12%. That's another $4,266. And see, it's only the last little bit of your money, the part that actually spills into that third bucket, the 22% bracket, that gets taxed at that higher rate. So when you add it all up, the total federal tax is $8,253. A whole lot less than the $13,000 you might have thought, right? And that right there is the crucial difference. Your marginal tax rate is that 22%. It's just the rate on the very last dollar you earn. But your effective tax rate, what you actually pay as a percentage of your total income, is only 13.75%. So let me say it again for the people in the back. A raise is always worth it. Okay, so we've got the map down. Now let's talk about finding the power-ups. In the game of taxes, there are two main tools you can use to lower your score. Your tax bill. They're called deductions and credits. They sound kind of similar, but trust me, one is like a super mushroom compared to the other. Here's the basic difference, and it's a big one. A deduction lowers your taxable income, so it shrinks the amount of money the government can tax in the first place. But a tax credit, that's a straight-up dollar-for-dollar reduction of your final tax bill. It's like a discount coupon for your taxes. Let's put some real numbers on this so you can see the impact. Let's say you have a $1,000 deduction. If you're in that 22% tax bracket we talked about, that saves you $220. It's good, right? But a $1,000 tax credit? That saves you the full $1,000. See the difference? Credits are the ultimate power-up. They are way more valuable. So you're probably asking, what's the best strategy out there? The number one move I can make, especially when you're in your 20s and 30s, it's actually pretty straightforward. Using tax-advantaged retirement accounts.
Okay, check this out. Let's put it into practice. Imagine you're making $70,000 a year. You decide to put 10 grand into your company's 401k. Then you max out your health savings account, or HSA. Then you take the standard deduction, which most people do, and just like that, poof, your taxable income drops from 70 grand all the way down to about 41,000. I mean, that's huge. You're literally lowering your tax bill right now, today, while also saving for your own future. All right, we've covered the basics, we've got the power-ups. Now it's time for the final boss. And for so many people in their 20s and 30s, that final boss is the side hustle. If you're freelancing, driving for a rideshare, doing any kind of gig work, there is an extra layer of tax that you absolutely have to be ready for. See, when you have a regular W-2 job, your boss pays half of your Social Security and Medicare taxes. You don't even really see it. But when you're self-employed, guess what? You're the employee and the boss, so you have to pay both halves. It's called the self-employment tax, and it's a whopping 15.3%, and that's on top of your normal income tax. This is the thing that catches so many freelancers completely off guard.
So, how do you beat this boss? What's the battle plan? It's actually pretty simple, but it takes discipline. Rule number 1, every time you get paid, immediately set aside 25 to 30% of it for taxes. Just move it to a separate savings account and don't touch it. Second, you have to pay these taxes quarterly so you don't get hit with a penalty. And finally, this is huge. Deduct everything, every legitimate business expense, part of your internet bill, your phone, the miles you drive, all of it. This is where knowing the rules of the game really pays off.
You know, this quote really nails it. The tax system is complicated, for sure, but it's not random. It has rules. And understanding the core ideas, knowing how tax brackets actually work, what the difference is between a deduction and a credit, that knowledge directly translates into keeping more of your own money. It's an investment of your time that pays you back literally. So from now on, I want you to think about filing your taxes a little differently. It's not a chore, it's the victory screen at the end of the level. You played the game, you used the right strategies, and now you get to see the results. Yeah, the game starts over again next year, but the difference is now you have the playbook. You know the rules. So what's the biggest question you have now?